All right, traders, let's quickly take a look at the euro dollar. I mean, what a week last week for the euro. Just a whopper of a move to the upside. All, of course, driven by Germany's new coalition government planning to make one of the biggest fiscal changes in Germany's history with a planned fiscal spending spree of close to 500 billion euros. That's a lot. And another potential 130 billion earmarked for potential loans. Now, this shift was the main driver for that big rush that we had to the upside for the euro and the euro dollar specifically last week, with the pair easily pushing above that 200-day moving average without really any resistance until we got to that 108.80 level where we topped out on Friday. Now, at the same time, something that also added to upside here was growth concerns, which has emerged in the US, also provided some additional downside for the dollar, upside for the euro, as that whole US exceptionalism theme that was in play for the majority of 2024 suddenly came into question or doubts last week, as well as the week before with the US data, showing us that there's a little bit of signs about signs in the US growth data pointing to downside risk. We also had the ECB last week, which didn't really provide any pushback against the move in bond yields, which has just absolutely ripped to the upside. And that has given euro dollar bulls more reason to push to the upside. So where does this leave us for the euro and more specifically the euro dollar in the week ahead? Look, even though the moves in the euro was amazing to watch, the immense amount of upside that we've seen price into the markets for the euro in such a short space of time makes chasing this move at the highs not very attractive from a risk reward point of view. This doesn't mean that fading the move is a good idea because we did have a massive fiscal announcement. It just means that trying to chase it from here feels a little bit like a risk. And it also means that the best case scenario, at least for short-term traders out there, would be to look for catalysts, possible triggers, to play for a little bit of mean reversion to the downside in the pair. I mean, if we just look at the massive ramp to the upside that we've seen in 1 month implied volatility for the dollar, which normally coincides with dollar strength, not dollar weakness, this by itself should give those euro bulls, especially the new ones, a little bit of reason to just play it a bit more cautiously coming into the new week. Now, a possible trigger that short-term euro bears can look for possible moves to the downside is we do on Thursday have the first planned discussion on that new fiscal reform between the new German coalition scheduled for the 13th on Thursday. So if there's any doubts coming out of those discussions about whether the new coalition will be able to pass that massive planned fiscal spending spree, or any news that it might not be as big as 500 billion, maybe something lower, maybe only 250, etc. All of those types of things could be short-term triggers to trade this to the downside. And also we've got US CPI on the docket. And if US CPI should surprise massively to the upside, giving the Fed less reason to cut rates, that could obviously provide some short-term downside for the euro dollar as well. As long as the fiscal plans remains intact though, without any real changes on that front, any type of pullbacks that we do see in the euro dollar will most likely be seen by medium-term players as buying opportunities. And that means any type of pullbacks back into that 200-day moving average, also coinciding nicely with the 1 month implied volatility low at that or around that 107.78 will be key levels of support to watch for possible mean reversion and bullish resumption plays in the week ahead. It's been a very volatile mover, so watch that fiscal news, watch US CPI, and as always, any questions, don't hesitate to let us know.